If you want to have millions in the bank when you retire, there's one secret ingredient you have to have. Whether you're 20, 30, 40 years old, whether you make 10, 50, 100 to $1 million a year, doesn't matter. There's one secret ingredient on how to really get rich and how to do it easy. So this video, I'm going to explain what that is and how young investors are really getting rich. Let's get into this. If you can, please give me a like and subscribe. I really appreciate it. It helps pay the light bill because this light just went out, so whatever. All right, so this video is geared more towards the young people, but doesn't matter who you are, whether you're 30, 40, 20, you got $1 million, this will help you make even more money. So young people though, why you need to start investing right now. So there's gonna be all these different things, from the cost of waiting, you don't need a lot of money, anyone can do it, automatic wealth, and the truth that no one tells you. I'm gonna go through all of this very quickly. So the number one thing, the cost of waiting. Don't wait, start now. My kids are 11 and 7 and already have a retirement account. Let me say that one more time. My 11-year-old and my 7-year-old have retirement accounts. If you are older than them and you don't have a retirement account, you know, if you're about 16, 17 years old, 18, over than that, it's on you. If you're 15 or younger, it's on your parents, and don't worry about that. But if you are 16 or above, start doing this now. Look into making a retirement account and how to fund it, right? So time is in your favor. Do not wait. Let's say you're 40 years old, right? Again, this is geared for anybody. If you're 40 years old, yes, you have less time to invest, so yes, you're gonna make less, but let's still go over these examples. You start off with $1,000, you're gonna save for 25 years, right? And that's because when you retire at 65, you say you get about a 12% return, kind of average. It's on the higher end of average. And then you contribute just $100 per month. A 40-year-old will have $177,000 in the bank, and they only contributed $31,000, right? That's pretty good. Now the 30-year-old, they put in $1,000, they get 10 more years, so they get to do it for 35 years, same rate of return, same $100 per month, and now they have over $500,000. Now they invested a little bit more, $8,000 more, but they got, what is this, about $400,000 more in their savings, right? So just that 10 years, just those 10 years, increased it threefold, right? Now, check out what a 20-year-old could do with $100 a month. Check that out. Guys, understand, math is math. Like math is math. Math, the numbers are not gonna lie. This is not something that I'm just magically coming up with. This is just reality. If you have $1,000, even if you don't have 1,000, you start off with zero, it's okay, but let's say you have $1,000. You have 45 years until you're 65 years old. You have a long time. You get 12% on your money. You only put in $100. It's less than car insurance, less than car payments. That's less than one trip to the grocery store. That is basically, I'm filling up my whole tank for about 85, 90 bucks right now because oil is going crazy. I mean, $100 is nothing. And you get $1.7 million when you retire. I can't stress it enough. You have to start investing now. You also don't need a lot of money. Some people think, oh man, I gotta have so much money, right? It doesn't matter if you're not making that much money. I've talked to some people and they're like, oh, I barely have anything. I understand. You have to do just little amounts, right? Now let's go back to what it was, $100 a month. Per month, that's not that much, right? That's $3 a day. Try to figure out something. If I said, you have to pay $100 a month to be a millionaire, not for your cell phone, not, for your Netflix and your Amazon, not for, all this other stuff, just one trip to the grocery store. If I said you could take out of your whole month just a couple days and trim a little bit of what you eat, but you become a millionaire, maybe multi-millionaire by the time you're 65, you might do that. You will do all kinds of sacrifices to ensure that you become a millionaire. Now, I'm not saying that it's a good thing that our country and people would have to sacrifice eating in order to have a retirement. I'm not saying that it's a good thing. What I'm saying is, what would you be willing to do? Just like the question, hey, if I gave you $25 million, but tomorrow's your last day of living, would you do it? And everyone say, no, I want more time. So your life is worth more than 25 million, right? It's just having that perspective of like, okay, well, if you were in this situation, would you really do it? And what would you sacrifice? No, I wouldn't sacrifice my whole life for 25 million. I'm sure you would sacrifice a few meals to be a millionaire. Right? A couple meals for a millionaire, I think that'd be fine. But a lot of people don't think of it that way because they don't understand that $100 a month can make you a millionaire. That's the problem. You don't need a high income to make money in the stock market. You don't. You can buy fractional shares. You can start with just $1. You can buy $1, right? You're not buying a whole stock, but you're putting $1 into a stock. There's no fee brokerages, Robinhood, Charles Schwab. There's so many out there. And then you also have micro investing apps where if you buy something for $5.70, it's going to go up to $6, and that 30 cents is going to go and invest for you. You don't even have to think about it. You also leverage compounded interest. The time that you have in the market matters, right? You want to have more time in the market. You also will have your dividends reinvested. A dividend is when, company pays you money. That's just plain and simple. They will pay you money to own the stock. And then consistent compounding. It's just compounding, and that will turn into large wealth. So it's easy to do, and you don't have to have that much money. There's this guy, and they call it the $8 million janitor, Ronald Reed. He was a gas station attendant, mechanic, and janitor. At the age of 92, he had amassed a secret $8 million fortune. Strategy: he did not win the lottery or inherit. He bought high-quality, dividend-paying, blue-chip stocks and held them for decades. Not 10 years, not 20, for 30, 40, 50. I'm going to show you exactly how much. He owned shares of over 95 companies, and he allowed these dividends to automatically compound over 69 years. Remember what that 1.7 was? I only put 45 years. You put an extra 25 on that, you will see you will get to 8 million. It's not crazy. You can do it, and you just have to have a lifestyle. If you're gonna, he was exceptionally frugal. You can't go out there and spend a lot of money and go out and eat a lot and do all this and have fancy this and have fancy that. You can't do that. Right? You have to be able, again, to sacrifice for yourself so that you can, in the long run, have a way better, lifestyle. You can retire, you can travel, you can take care of yourself health-wise, you can do all these things, right? Those things are very important. Anyone can do this, right? You don't need a finance degree. A lot of people think, oh man, numbers and percentages and this and that, right? You don't really need to know any of that. You don't. Why you don't need a degree? You have index funds. These allow you to buy basically the entire stock market. So you don't have to worry about it. The entire stock market's basically going up, and it's continued to go up since it started. I know some people are like, oh, well, what if it's going to be fine. Our humanity is not going anywhere. It's going to be fine. There's also professional managers who run these funds, and they can handle all the complicated picking for you. And you have robo-advisors now with AI that can help build a portfolio for you. Now, the minimal street smarts you do need to know. You need to understand 4 fundamental concepts. Diversification. You need to understand you can't just have one, you have to have multiple stocks, right? The $8 million Reed, he had what, 95 stocks? Now 95 would be a lot to have to start off. But when you buy the index fund, it's like buying a bunch together. So that would be fine. The S&P 500 is literally the top 500 stocks, basically. So it's like, that's 500 stocks you would have if you bought that index. Compounding. So these are the 4 things: diversification, compounding, fees, and emotional control. So we just went diversification, now compounding. Excuse me. Oh my God. Whew, almost died. All right. Compounding. You have to understand what compounding means. And let me show you actually a quick example of what compounding can do. Now, some people don't understand on what happens to a penny if you double it up every day for 30 days, right? So if I do times 2, right? Now we're in day 2. Now you have 2 cents, right? That's day 2, 3, 4, 5, 6, 7, 8, 9, and 10. So now you've doubled this penny, and you go in, and now you have $5.12. Now, you have to understand, you're not going to double your money every year, every day, right? But compounding means all this money that you have gained now from that 1 cent, now you've gained $5.11. That $5.11 is working for you now. That $5 is going to double. Not just the penny, the $5. And then when you have the $5 double, now it's 10 that's going to double, right? So right now we're at 10 days. Let's go. 11, 12, 13, 14, 15, 16, 17, 18, 19, and 20. Now, where do you think this is going to end up after 30 days? We're at $5,000. Where did you think it was going to be when I first started this, right? Check it out. Now we're going to go 21, 22, 23, 24, 25, 26, 27, 28, 29, 30 at $5.3 million by just doubling it up. Now, you have to remember, the stock market is not all fun and games. So the first 10 years, you only got $5. Not fun. Now you went from 5 to, what was it, 5,000? Better, a lot better, but yeah. But then you went to 5 million. Takes time. That compounding. Fees. You have to understand what fees are, what brokerages might charge you certain fees, and what index funds also have fees, so just choose wisely. Emotional control, I circled this one because you have to have emotional control. You do not want to, oh my God, everything's going crazy, I need to sell everything. I swear, I have done that a few times where I have let my emotions take over my stock market decision making, and it has done no good, absolutely no good. The only time I have made good decisions in the stock market is when I was completely rational, I was thinking about it, I did my research, I felt educated and confident, and I wasn't doing emotions of what I felt. Even some of the buys that I made, some purchases that I made that didn't go well, and then I ended up selling them for a loss. So some of it was emotional because I just felt, I thought, and it was like, look, a lot of things are pointing towards you. Maybe you should just stay away, especially if you don't want to risk too much, and so being emotionally under control is huge in the stock market. Now 4, automatic wealth. This is one of the biggest ones. You just want to set it and forget it. Have it automate, just make monthly deposits. Don't even think about it. Don't think about it. So what it does is it removes emotional biases. It prevents hesitation. You're not going to be like, oh, should I do it? Nope, it's just doing it for you already. Eliminates decision fatigue. When you have to constantly think about what stock should I pick, what stock should I have, it's going to wear you down, especially if you don't care about stocks. That's just plain and simple. For me, I like stocks, so I will research and I have fun doing it. But for most people, they don't. So you don't want to have to constantly make that decision. Just like me, I don't like to cook. I don't like to have to deal with food and all that. So having to constantly come up with a decision on what meal to have is very hard to have. It's a hard decision to make sometimes. I'm fatigued. I'm tired of it. Then it curbs panic selling. Again, you're emotional. You're not going to, oh my God, things are going crazy, I'm going to sell. In fact, you're going to just be buying. If you're automated, you're just going to continue to buy when things are bad, and you're going to get great prices on your stocks. It also leverages dollar cost averaging. Essentially, let's say you have a stock that's $10 and you bought it for $10. Now the stock is at $5. Well, you buy it again for $5 because it's just automatically going. Well, now you met in the middle. You bought it at 10, but then you bought it again at 5. So now your actual cost, your whole cost is $7.50. It's not $10, right? So maybe you're down a little bit, but now once that stock goes up to 10, you've gained money on it, right? If you had just kept it at 10, went all in at 10, you'd be at nothing. You'd be at, 0. But if you continue to buy, even when it goes down, you will lower your cost basis. So that when it comes back up, you'll be like, oh, I've been buying it at a discount, and now my average is a lot lower. So that's what you want to do. It also enforces paying yourself first. It guarantees savings, right? It removes temptation about trying to spend money on other things, and it builds consistency. You're going to see it consistently go in. And even though you may not be doing it, to have it constantly going in, you will feel like, well, I should still have it depositing because I've been doing it for years, right? To now not do it might actually feel weird. So it builds that consistency. It also maximizes your time in the market. You want to have, some people say don't time the market. When you think everything's at the bottom, that's when you should buy. Don't try to time it out. Just buy as it's going down and buy as it's going up, and you'll be fine. You'll capture all kinds of growth, you'll speed up your compounding, and you reduce drag, right? Trying to wait for the right time. Just be in the market. That's what matters the most. All right, so that's that. Now, the truth that no one tells you, the cash sitting in the bank loses money. You lose money to inflation. You do. Now, it says inflation erodes your savings. Now, I do have a high yield savings account for this example. So I want you to understand that the example of putting your money in the bank, this would be an extreme situation, an extreme positive. This would be the absolute most you will ever get from the bank. So an initial $10,000 investment grows to $30,000 in the high yield savings bank compared to $108,000 in S&P 500 over the last 25 years. Now, S&P 500 gets you, it gets you good amounts. The NASDAQ will get you even more. Just saying, I like the NASDAQ. So now let's look at the different scenarios. You have the bank account. You put in $10,000, you got 4.5% return, which you're not going to be able to find that anymore, and it's just not going to be happening over time. But I wanted to put in something great, like the absolute most you'll get. And this is the value you have over that time, and you made $20,000 in profit. Now, if you bought into the S&P 500, you're $10,000, you're assuming only 10% return, or you could get an 11 or 12 with the NASDAQ. 25, 60, 100, your profit is 98,000. 5 times more. I mean, I would not just leave my money in the bank. You don't want to do that, And then another thing, people are scared, like, but it's like gambling. It's like gambling. You know that saying from Hangover where he's like,
gambling? Who said anything about gambling? It's not gambling when you know you're going to win.
The longer you hold your investment, the higher of chance you are to make money. Now check this out. This is the stock market, and it's for real. The probability of you actually making money if you just hold on to the stock market in the index. After 1 month, 62%, 6 months, 68%, 1 year, 75%. So after 1 year, you have a 75% chance of making money. After 5 years, it jumps to 89%, 10 years, 94%. After 25 years, if you had bought in the index fund, there's a 100% chance. There's never been a 25-year time period where you did not make money. Now, granted, you could look at 2001. 2001 to 2006. Nothing compared. Even though the NASDAQ was up, it was at a crazy. The NASDAQ is so much higher than it was in 2001. It just was, Now there are some stocks. What is it? Is it Intel or there's one stock that literally just surpassed its 2001 peak, that's just crazy to think of. But if you're buying in the index, you're gaining a lot more, right? So remember that it's not gambling, right? It's not gambling if you know you're going to win. So now, if you're a young person, how do you start this journey? Right? How do you go about starting? Well, number one, you have to define your goals and you have to learn the basics, right? You have to understand what you want. Retirement, home, what kind of life you want. And learn the simple concepts of risk versus reward, compounding interest, just understanding how that's going to work. You got to build your foundation, your safety net. You want to have some kind of an emergency fund, 3 to 6 months in expenses, and then you want to pay off any high interest debt. Then you got to choose an account. Now, you can have a workplace where you work. They might have a retirement account for you. You can also get an individual retirement account, or a simple brokerage account. Now, they all work a little differently for tax advantages. The workplace retirement, you don't really get to choose individual stocks. You don't really have a lot of say. You can say, I want to be aggressive or I want to be safe. That's kind of what it is. You can move around some index funds, but typically a workplace retirement doesn't give you a lot of control. An individual retirement account gives you a lot more control, but it also limits how much you can put in there. I think it's about, $6,500 right now? So you can only put in that much per year, but you have ultimate control. You can buy whatever stock you want. Simple brokerage account. It's not a retirement account. It's just an investing account, which every year at December 30th or January 1st, they're going to calculate all your stuff that you did in the year before, and then you get taxed on how much you gained. If you have a retirement account, doesn't matter if you gained $1 million in 1 year, you're not getting taxed unless you take it out. Even if you don't take it out, if you just sell those stocks and you gain $1 million, like if you were to sell for $1 million of profit in a retirement account, you're not going to get taxed. You only get taxed if you take it out. If you sell stock for $1 million in a regular account, you get taxed. Doesn't matter if you take out the money. Once you sell the stock, since it's a brokerage account, you can think of it as like a checking account. It's in your account. You have access to the money. So they tax you. So that's a big difference, right? Number 4, you want to invest in many companies at once. Think of these as an index fund. I always tell people you have Apple, Amazon, all these different companies. If you put them in a grocery bag, that grocery bag is your index fund. It holds a lot of companies. So if one company goes bankrupt, you're okay. So that's a really good way to start off when it comes to investing and what you want to find. Then you also, again, want to focus on low-cost index funds, which is, again, S&P 500 and all that stuff. So you want to stick to that, and then set up automatic contributions, reinvest the dividends. So if a company pays you money to own it, reinvest it right away, or you can have it set up. You can just select an option so it just automatically buys that stock again with whatever you got. Sometimes I don't like to do it depending on how much dividend I'm getting. Like the other time I got like a 5-cent dividend and it bought Micron, which was at $900. So I got like a 0.0001 share. And I was like, okay, that's where I'd want it. That stock, I'd want to just give me my 5 cents, right? But you can still do that, right? And then be patient, years, not days. Remember I said that 30-day thing with the penny, how it went from 1 cent to 5 million. Think of the days as years. Don't think of the days as days. And again, you're not going to double your money like that. You're not going to go from $1 to 5 million or whatever that would be. Like you're not going to do that, but you can still make something similar to that. So that is essentially the best way to make money. Now again, I just want to show you again how a 20-year-old with just $1,000, $100 a month, just $100 a month, you can be a millionaire, almost a multi-millionaire. Now 12% is average for the NASDAQ. I think that's very doable. This is a very doable number for any 20-year-old, any 30-year-old, any 40-year-old. Any 40-year-old. And, just even though, I'm almost 40 and I have more money than this in my account, and I believe I'm going to be making more than 12%, and I definitely I'm already putting in more than $100 a month, so I'm sure I'm going to have plenty more than this. If you're 40 years old and you're feeling like I can't do anything, like I can't make it, it's not worth it. I mean, yes, it is. Yes, it is. It's worth it. It's worth the $100 a month. Now, again, if you can afford $100 a month, what would you do for $150, $200 a month? Would you do a little bit extra for that extra money so that even if you're 40 and you're not feeling that good about it, maybe you have just a little bit more because you just did some, And that's retiring at 65. What if you retire at 70, 75? Right? What if you don't need all the money until 75? I mean, the money is still in there. I'm just saying if you were to, this is how much money you would have at 65. Doesn't mean you're just pulling it all out. You'd still let it ride, right? You'd still let it continue to go. So after another 10 years, this 177,000 would probably be $1 million or something. And so it's just, that's just what it is. But anyway, I really appreciate anyone who's watching. Thank you. Anyone who does like and subscribe, I appreciate you all. This video, like I said, is geared more towards a younger crowd. I got my 2 kids' retirement accounts. I try to motivate others. I got some of their cousins' retirement accounts. I know that Trump has the Trump accounts. And so I'm encouraging everybody who's had a baby that I know, you gotta get it. Once you get that social security number or the birth certificate, whatever they need, do it. Sign up, get that free $1,000. And, you saw what $1,000, let's just do this really quick. I'm going to show you something really quick. let's do this compounding interest. Now let's say, right, you get a Trump account. Check this out. You have a Trump account and you get 12%, and you are going to, this is what babies are going to have. I just want people to realize what a newborn is going to have if done correctly. If you invest it into the NASDAQ at 12%, it's the $1,000. And the baby never, the person that grows up, the adult, never makes a deposit. Let me make this clear. The person never makes a deposit again. The $1,000 is all they have. Check this out. I don't like to get political and do all that. I know that the Trump accounts it's not his idea. It's been floated around for a while. But I will say this is probably one of the best things that's ever happened to the financial security of a group of people in this country. Okay, there's a lot of people out there that get a lot of benefits financially from this country. I don't, how can I say this? For people who don't know better, for people who aren't in position, like you could be broke, and your kid is gonna have a $1,000 funded retirement account. That is big. Typically, that doesn't happen. Typically, you can get $1,000 free $1,000 if you already have $1 million, right? It's the rich and famous go out there and get the free rides, the free this, the free that. It's like, hey, like what? They the ones that can afford it. I should be the one getting the free stuff, right? I mean, whatever. But it's like, for the people who, there's gonna be a lot of people who have no idea about a stock market, anything. Now look, 12%, when the kid is 18 years old, they're going to have a $7,000 account. Now that doesn't seem like anything compared to what I just showed of a 1.5 million. But you have to understand, if at 18 years old you have a $7,000 account linked to the stock market, you are ahead by far, way more than the rest of the people in the world or in the country. So I think this is one of the best things to happen for underprivileged people, right? Obviously, this is gonna, if you're filthy rich, you can still get the Trump account, I think. There might be an income limit. I don't know that. There should be. But my point is, people who make nothing, who don't know anything, will now be in the stock. Now, you have to sign up for it though, right? That's the hard part. Is that you still have to sign up for it. You gotta download the app, you gotta do all that, but that is gonna help so many people in this country. And I'm trying to motivate, and I actually should just make I'm just gonna make an extra video just on those accounts, trying to push that narrative of like, people need to start their accounts because it's not forever. It's from 2025 to 2028. And I don't know if in 2029 you could still apply if you were born in 2026, right? I don't know what the limits are. I'm not having babies. I'm not planning to have any babies, so I don't know all the details about it. But if I was, I would want to know all these details because it's very important, and it's, like I said, $1.5 million for free, basically, for all these kids. So, yeah, thank you for watching. Really appreciate it. Sorry, I kind of went on a little bit of a tangent there, but it's just, man, it's important. It's important to be young and invested, right? A newborn making no money, investing no money, but they start with $1,000. They're a millionaire. It's crazy. So, yeah, think about that. Thank you for watching, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.